Hello and welcome to another update video about MATIC. MATIC has continued or is continuing as we speak its journey towards that next support level at 78 cents. That's not a surprise. I highlighted to you that it's very likely now that that 78 cent level will be tested. We'll talk about that in this video. Main reason for that is that the B wave bounce that we've seen was so shallow. So we still have two scenarios on this chart. We've got this sort of 1-2, 1-2 setup, which is more directly bullish. In this scenario, the price should react and rally somewhere from this region and rally in a third wave. So we have a 1-2, 1-2. As soon as the wave 2 is finished, that would be wave 2 of the larger degree third wave. We should see the start, the onset of a third wave rally, typically the most bullish wave in Elliott wave. And the relevant support levels are 86.7 cents. That's the level that's currently still holding. It's the golden ratio level, the 61.8 retracement. And below that level, I've got the 78.5 cent level, which is the 78.6 fib level. Okay, very critical support for a wave 2. Any sustained break below that level will push us most likely into the alternative wave count, which is here highlighted in green. In the alternative scenario, in this green wave 2, the only difference between the two counts is, well, obviously the support area is lower. So instead of 78 cents, we'll have 58 cents as support. Now you could say, okay, how do I know which one it is? Well, it's very simple. There's one level that distinguishes between the two, and that's the 78.5 cent level. If we get a sustained break below that level, there you go. And then it's likely the green count. The advantage is, though, they are both bullish counts. So they both give us an indication that we should continue to move to the upside, but we're currently in a bit of a pullback, obviously, within that overall uptrend. So, and yeah, in more traditional markets, you might call that a bit of a crash, but it's actually just a corrective pattern. I mean, just look at the structure, just look at this and compare it with what's happening right now. It is so similar. And I have to say one thing. I have to say one thing. Both are ABC structures, here these declines. You might remember it from back here. Also here, the 100% extension level was not reached. So it would have been, I mean, depending on how I measure it, there it was reached. But if I considered that a 5-wave move down, 3 waves up, it was not reached that 100% extension level, okay? The price reached the, I believe, 78.6 extension, which is okay, but it was a bit of a shallow C wave there. So that could happen again, right? I mean, I can only highlight probabilities, and at the moment there are two things, and I can only analyze what I can see. So I can see that the correction isn't finished yet. If it is, there's no evidence. We've just made a new low. And it's typically probable that a C wave reaches the 100% extension of the A wave, and that is at 76.7 cents. That's actually slightly below the 78.6 retracement level at 78 cents, but not a problem. If it's not a sustained break, we can give it a chance and the benefit of the doubt. But I'm saying it might not get there, okay? It might not get there, so just be aware of that. Perfectionism or trying to be perfect with a perfect entry in corrections often doesn't work. So it's usually more interesting to opt for a more like scale-in approach, accumulating at certain levels in these support zones with wise position size management so that you don't risk too much if the price continues to drop lower, because it's like catching the falling knife, right? It's a very hot knife you try to catch there, but you don't do that just without a plan. There is a plan. There are clear levels and parameters. So I just told you below a sustained break below 78.5 cents will likely mean that we're moving into the green count, but also that is not bearish. So you need to think about how does that, what does that mean? It could just be that we drop through this support into the next one and then rally from there. And support here is 58 cents. I don't have anything reliably bullish below 58 cents. So for now, no change. I mean, it minimally takes a break above the last high at 93 cents to indicate that a low of sorts is in place. Better would be a break above the B wave high at $1.09, and then we should get into the $2 plus region. That's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye bye.